Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing.
Hello and welcome to this week's report. Man, it was a doozy. Markets are tough to know what to do, but let's jump right in and let's look at the recommendations, right? Regardless of whether we have a crystal ball or not, we still have to make decisions. So let's go ahead and look at our recommendations and we'll backtrack into the thought process behind them like we usually do. So first thing, I'm going to click the button here. It says establish hedge of 25% of Q1 corn bushels by selling May 25. So we did hedges by selling March. Now we're going to do hedges by selling May. With this 25%, you should be up to 75% priced on your Q1 bushels. Now, the next item, click here, re-own 30% of Q4 soybean by buying July 25. It might sound weird that we would be selling corn and buying beans, but I want to go through the rationale, and later we'll fill out the rest of this page here where we look at the recommendations. But let's start by, let me just get the images pulled up here, and let's start by looking a little bit about what's going on in the crop world and what are the bullish and bearish factors associated with it. The first thing we want to talk about is this is soybean harvest. Let me get a marker here. We will use, I want a highlighter and we're going to make it green. This is soybean harvest, and I just wanted to select, let me move this over here to the side. Just wanted to select some of the key states here. So soybean harvest in Brazil. Let's look at Mato Grosso. In 2024, Mato Grosso was 30.8% harvested by February 3rd. The year they're at 14.6. So they're about 15 percentage points behind last year. In all fairness, last year was a little faster, but that's still a big issue. Mato Grosso do Sul is about, actually, let's do this a little bit differently. Let me highlight the delayed ones. Ones that are significantly delayed we'll highlight in red. So we have Mato Grosso, 15 percentage points behind. Let's look at some of the other ones. And that's about a quarter of Brazil's area. This is another one that's pretty far behind. This is not as big of a production region, but they're 6 percentage points behind. And Goiás, they're about 8 percentage points behind. And then we have quite a few others that are pretty close to being on pace. These low percentage ones I'm not going to deal with, but Paraná, pretty much on pace. The images I shared 2 weeks ago, I believe, were from harvest sets in Paraná. Minas Gerais, they're about on pace. Mato Grosso do Sul, pretty well on pace. And then the other ones are just getting started, so we're not going to give much attention to that. There are, though, implications when we look at kind of these delayed states, São Paulo, Goiás, and Mato Grosso. There are some implications on, this is double crop corn planting. So they harvest the soybeans, and then they turn right around and plant corn on top of it. So if soybean harvest is delayed, planting double crop corn is delayed. So let's look at those states, and we'll look at other ones as well. But let's get this back in red here. Mato Grosso was one that was delayed. So last year they were 30% planted. This year they're 6.2% planted. That right there is probably the most bullish story on corn coming out of South America, is that state, which is a powerhouse producer, being 24% off pace or behind pace compared to last year on planting. There were some others that were behind. São Paulo, their double crop corn is not delayed yet. I talked to a customer in northern Paraná who is not far from the border of São Paulo, and he said that they can plant that double crop corn crop into March and they're okay. The other one that was actually talked to a customer last night, and he said Goiás, and this is an important takeaway. This will kind of transition us into just from market information into kind of an opinion. I talked to a customer last night in the state of Goiás, and I said, listen, how's harvest coming along? He said, our soybean crop is absolutely fantastic. We're expecting a good soybean crop. I said, are you behind on planting your double crop corn? He said, yes, but we're not really worried about it. We got our beans in early enough. Maybe we're getting some quality, dockage because we're a little bit behind, but we'll get the beans out and we'll probably get the corn planted on time anyways. We planted our beans early enough to where we have a week or two buffer that we don't usually have. So are there delays to planting double crop corn? Absolutely. But I want to shift gears now because that's going to play into a little bit of the rationale behind the recommendations. And just before we do that, we always want to look at this pyramid, right? Starts with the market plan portfolio, and then we look at seasonals, funds, and technicals, which we will do in just a little bit. And then finally, the action plan. So the action plan, we're selling Q1 corn, we're buying Q4 soybeans. There's a lot going on here. We really need to understand the thought process behind some of what's going on. And that's why I wanted to make sure that we had just that backdrop of information of what's the headlines from the field. So let's jump in there and let's look at the technicals and the positions of the funds. All right, pulling this up here. We're going to start with corn. We're going through the managed money, and this is pretty significant. And I've added 24 and 25 here. Move this over here to the bottom. All right, so I've actually included 24 and 25 as we look at the managed position of the funds here. And now this is what I think is interesting. Just look at this trajectory here. So whenever I'm looking at markets, there's kind of three things that I'm thinking of. What is happening in the market? What will happen in the market? And what should farmers be doing? What's happening? What will happen? What should customers be doing? Okay, it might seem obvious, but what's happening in the market isn't always that obvious. Sometimes there's price action and it feels like there's something just way out in left field and you're like, did I miss something? Why is everybody buying all of a sudden? Why? And there's not that much clarity there. No one has a crystal ball, but sometimes there's a pretty good feeling that this has gone about as far as it can go. I bet we're going to get a correction. And the third thing is sometimes you don't really know what's going on in the market or what's going to happen, but based on data what farmers should be doing. So I'm always seeking clarity in those three items. Right now, I feel that there is a fairly high level of clarity about what is happening, less about what will happen, and even less about what decisions should be made. So of those three areas, what is happening, in my opinion, is fairly clear. So I'm going to start with the clarity that we have. Let's just state a few things. If you look at the green arrow, the managed money, speculative money in Chicago is buying. They have decided to buy. They have actually increased their bought position for 6 consecutive weeks. So speculators are buying. Why are they buying? In my opinion, speculators are buying because of fear of inflation and because geopolitical uncertainty. Trade wars many times lead to shooting wars, right? So the geopolitical uncertainty creates this desire, let me make sure that we're stocking up on food. So I think if you were to be in those conversations of speculators, they're saying, listen, we're going to have inflationary pressure down the road, and we might even have a more intense geopolitical conflict. Let's just make sure we're holding on to some food. I think that's why they're buying. Then there's also the headline risk of delayed corn planting in Brazil. So that's the bullishness that's driven corn up so much. Let me back out of this and get over to the next image. This is what that looks like on a price chart. Let me mark this up. If we look at May corn futures, that's what it looks like on a price chart. Let's get this in black. Basically, during that period that they were buying, and it started back in November, the spec funds bought. Oh, look at what happened to price. So who is buying? Spec funds. Spec funds are buying corn. That's who has risen the price. So where are they going from now? That's, remember, what's happening, and then what the next thing is what will happen. Well, are they going to continue buying? Are they going to step off the gas when it comes to buying? I would also like to say, and this is not, we don't know to what extent what I'm going to say is going to hold true in 1, 2, 3 weeks, but I personally think that there is right in here, close to that $5 mark, got a little carried away, close to this $5 mark, I think that there is the sentiment from many U.S. farmers that I should really be selling $5 corn. All of 2024, if I had $5 corn, I would have just, it's the responsible thing to sell $5 corn. So we have spec funds that have decided that they're going to be on the buying side. Then we have, in my opinion, farmers saying $5 corn, that's a sell. I should be selling it. This is the responsible thing to do. And then we got this trade up here, up over $5 on the May contract, came back down. And then yesterday's trade, we got what's called a key reversal. Came down, touched the 20-day moving average, and tagged it. And then, so what's a key reversal? You trade lower than the previous session, you trade higher than the previous session, and you close up. And that happened, and then we're coming up here again. But if we think about this green line here, and we just think about the selling pressure, we've only traded above $5 2 times. Are we really going to stay sustained above $5? Are we going to get that last leg up on the rally? Maybe. But that's the final chart that I want to show on corn. This is the old crop, new crop spread. So this is the July contract minus the December contract. And maybe this spread just keeps going up like it did in the past, but it's come up here twice. It's not really moving up. And we're going to look at the soybean spread. The soybean spread has actually come down. Personally, now we got to go back to headlines. So let me shut off this screen here, and then we'll talk about beans in just a minute. Okay. All right. So we have speculators that have speculators deciding to buy corn. Bullish. we have a weather story out of South America, delayed planting. And then we are going to have, very shortly, we're going to start having battle for acre conversations intensify, and I'll talk a little bit about that in just a minute. Battle for acres will intensify, and then we're going to have planting risk in the U.S. So will speculators continue to buy nonstop and to take this market up? Maybe, but we have a February to get through. We have March to get through. What are the next headlines to break? Probably the next headlines between now and the end of February is, oh, they got caught up with their double crop corn planting. Because if they get a few days of rain, without rain, they will get caught up. I think, there's only a couple states behind. Yeah, they're significant ones, but I think that double crop corn is not, I think they'll probably get caught up. That's not a detriment yet. And will speculators just continue 6 consecutive weeks? Will they push it to 7 to 8 to 9? Maybe. But there's a lot of weeks between now and say the end of March report where we get prospective acres. And it would not surprise me if we bump into the selling pressure here at $5 and then the corn market comes down and needs to catch its breath. Honestly, I'm kind of hoping that we do have that drop off because we're layering in hedges here towards the top of corn. And honestly, now that we've fired that warning shot and we know that we can make light work of getting to $5, we've got some earlier sales on the books that I would actually like to be able to step in and re-own again. If we get a nice little price dip, get that market falling down where everybody's like, oh, there's going to be plenty of corn in South America and the funds stop buying and all that stuff. We get that price drop. I'd actually like to step into some ownership positions before our spring rally. So I'm even, I don't know if hoping for a downward correction is the right way to say it, but it seems to me like we have a lot of weeks, 6 to 8 weeks before we're getting to those end of March reports. And I think that is a long time for us to just continue this upward trajectory without catching our breath in the corn market. So my hunch is around this $5 mark, we're going to find resistance and then we're going to fall off, catch our breath. And at that time, now that we've made light work of getting to 5, I want some type of re-ownership position because we come into the spring, get any type of weather scare, we could see 5+ pretty easily. And once we've kind of chewed through all the selling pressure at 5, which we're working on right now, who's to say that stops us the next time up? So that's kind of my expectation. But again, trying to understand the time and then the moment now, what's happening now, and then trying to forecast, no crystal ball, but that's a little bit of expectations. Now let's shift gears to soybeans. And let's look at the managed money, start with the managed money on soybeans. And let me go ahead and get the marker up here. We'll go with yellow. And drag this to the bottom. There we go. All right, so we've only had 3 weeks where speculators have started buying soybeans. So they've been diligently getting rid of their short position, but they've only been buying soybeans for 3 weeks. Just put that in your back pocket. Let's go talk about price action a little bit. Now let's get a marker here in black. There we go. We have this 20-day moving average moving up, and then we have the 200 coming across. This is what's called the golden cross. As soon as we broke through that on corn, that's when we saw the big move in corn up, that real big move in corn, which was very friendly. We've not seen that in all of the corn. Well, I think we have now, and I think the other, new crop corn has followed suit now. Soybeans are working in this wedge. Yesterday, they also had a key reversal. Lost my marker. Let me get that back. Yesterday, soybeans also had a key reversal right here where they traded lower than the previous low, higher than the previous high, and traded up. And it looks like they're wedging in here. So are they going to break out to the bottom or are they going to break out to the top? Well, speculators have started buying them. And this is where I want to talk about the battle for acres, so to speak. Yes, maybe the selling pressure from farmers in Brazil will really knock, punch the beans in the gut and really knock them down. That is still a possibility. So I don't have a high level of conviction that we're out of the woods when it comes to soybean prices. Maybe we are, maybe we are. But I do think it's important to note that speculators are very bought on corn. So even if they reduce that bot position a little bit, they still want corn to go up. And I think to some extent, with all the weather uncertainty ahead, Safrinha corn crop, battle for acres, and then U.S. planting risk, I think that corn is at least somewhat sustained. So yeah, I hope it comes down. I hope we get an opportunity to buy corn lower. But I don't think we're saying, that was we put in the high for the year. It's never going back to $5. That's my hunch. The ratio, if you take new crop corn, new crop beans divided by new crop corn, right now it's like 2.28. So what's the right number for that? Some people say, 2.5, 2.4. In my opinion, that's a range that goes from about 2.3 to 2.7. Within that range, beans and corn can trade a little higher, a little lower. It's at 2.28 as of overnight trade. So we are, in my opinion, at 2.3. We're below kind of that lowish threshold. So I think that beans need to gain on corn. So if corn comes down, beans hold, it gains. If corn's going to stay high, beans need to move up. Either way, in my opinion, corn has anchored up here to the point that it is supporting the price of beans. And this selling pressure out of South America, we kind of know that happened. And what we're seeing is speculators saying, I don't care that they have to sell it. I'll be on the buying side of that because there's a lot of uncertainty ahead of us. 1 week at a time, one decision at a time. But the beginning to reestablish an ownership position here just before what might be a golden cross and might be friendly soybeans, this makes sense. And if for some reason we get this soybean trade down, that's why we're not re-owning 100%, right? If we trade down here, okay, great. We still have 70% of our quarter 4 beans that we can average in. We still have quarter 1 beans that we've sold average in. We still have more quarter 1 beans to sell. So we still have a lot of work to do on the selling side, and we still have a lot of dry powder if we need to re-own something. So if beans go down, basis will improve. We can exchange, a cash position for a futures position. Will be okay. I also wanted to point out the thought process behind the buying beans. The spread played into it. If you remember, just if we were to kind of compare it to corn, the corn spread is still kind of up here in this higher level. Well, the bean spread, it's already got kind of punched in the gut way down here. So another way to think about that is July corn is only a little higher than the new crop. I'm sorry, let me rephrase that. Since that spread has come down, July soybeans are only a little bit higher than November soybeans, while corn is still way up there. So that's the thought process behind buying July, is that spread has come down. So in a nutshell, buying some, re-owning some quarter 4 beans, selling some quarter 1 corn, that seems to be what makes the most sense. And then we'll wrap up the video. I'll shut that one. Let me get the page open here. Let's fill out our box to wrap up the video. Also, feel free to send in your questions. We don't have questions this week, so we will go from there. So seasonally, it is not a buy or a sell for corn. Seasonally, it is a buy for beans. And then from a managed money, corn, the net position, the funds, the speculators, they have bought enough corn to justify selling. For the managed money for soybeans, that's still neutral. Yeah, they're long, but they haven't accumulated enough. Both are still above the 20-day moving average. Both are in uptrends. Now let's talk a little bit about basis. Basis levels for both corn and soybeans are tracking sideways. Probably for the next 2 to 3 months, they will continue sideways unless we have such a big rally that it brings them down, or such a big sell-off that it brings them up. So basis probably is not going to change very much. It doesn't usually. It's been about, pick sometime Q4, where it started tracking sideways. It's been about the same. Maybe it was January, but it's been about the same, and it probably will be about the same. The winter months, it's very hard to get very much excitement out of basis during the winter months because there's plenty of grain. Farmers know what it is. They just move it back and forth. If you want basis opportunities, a lot of them need to come either around when people's bins start getting empty. Sometimes you get some good bids, or there's also some things that we can do around new crop. But there's not much of a story on basis. That's why I haven't been showing the basis charts that much. Technical considerations. Let's start with corn. Key reversal in corn market, but will farmers add selling pressure near $5? Now let's go to soybeans. Key reversal in soybeans. Soybeans looking for a golden cross. What is the upside potential of the bean market? ? Delete that. So in a nutshell, that's that. Let me know if you have any questions. We'll answer them. It was hard to make the recommendations this week because these are exciting markets. Key reversals in both. And, maybe corn's just going to go to the moon. Maybe corn's going to go way up high, and we're going to feel bad for having sold $5 corn. But, that's a world we can live in, right? If we're getting $5 hedges on and we're regretting that when we're doing it against the spec funds, that's a world we can live in. And, if prices go up, maybe we could start getting some new crop corn closer to $5 so we could get a little bit more excited about selling new crop. But that's not today news. Thanks for watching, and we will be in touch.